Welcome back. You're watching Startup Central with me, Nayantara Rai. This is the only show of its kind on Indian television dedicated, of course, to startups, innovation, technology, disruption, entrepreneurship. Now, lack of capital has been described as one of the biggest handicaps facing Indian startups. One of the biggest handicaps in their way for becoming truly Atmanirbhar as well. And the government of India is hoping to change all of that and is opening the floodgates for domestic capital to invest in India's startup story. How is it doing so? Well, there is a gazetted notification dated 15th of March, which gives into a long-standing demand of industry, which is to allow pension funds to invest in India's startup story. These are domestic pension funds that we're talking about. Time and again, you have seen startups, founders, unicorns, decacorns, all of them talking about why is it that foreign pension funds can be a part of this burgeoning story, whereas the domestic pension funds cannot. So the floodgates are being opened, and we may say so, it's a small move, but a very big move that can have huge ramifications. So what is it that we're talking about? Domestic pension funds, including the EPFO, will be allowed to invest in alternative investment funds, or AIFs, which can then in turn invest in venture capital and startups. So that is the entry which has been given to pension funds when it comes to startups. But there are conditions. What are these conditions? Well, 51% of the AIF will have to have exposure to venture capital, infrastructure, and SMEs. The second one is these pension funds cannot invest in AIFs which have a corpus of less than 100 crore rupees. So minimum size has to be 100 crore for a pension fund to invest in such an AIF. Also, exposure to a single AIF cannot be more than 10% of the full corpus of the AIF. And another very important clause, and this is where you can see the intent of the government to ensure that domestic capital does go into startups. One of the conditions for pension funds to invest in AIFs and in turn in startups is either directly or indirectly, the investments cannot be made in securities and companies that are domiciled overseas. So it has to be for the Indian ecosystem to become Atmanirbhar and to prevent flipping. Flipping has been identified as one of the biggest problems and a byproduct of lack of capital. Let's put it in perspective for you. Since 2014, estimates say that more than $75 billion has been invested in Indian startups. Only 10% of that is from domestic capital. Let's compare that with China, where 60% of the $165 billion invested is from within China. 21 of the 43 Indian unicorns have also flipped. I'm going to be discussing this and more with Dr. Mohandas Pai, who's now joining us live on Startup Central to talk about this big move by the government. It's always a pleasure talking to you. Mohandas Pai, how exactly are you seeing this notification by the government? Are you seeing it as floodgates being opened for domestic capital to invest in Indian startups?
Well, my view is that is a very good start. But let us look at the total size of the funds that are now allowed to do this. The Employees Provident Fund has a balance sheet of about 15 lakh crores this year. They get about 1,70,000 crore plus. The PFRDA, which runs the pension fund, has about 6 lakh crore this year. That is 21 lakh crores. But in both of them, they'll get an inflow of 2.5 lakh crores next year. Then after that, you have other gratuity and superannuation funds, totally for the whole country. They could be, in my opinion, maybe 5 to 6 lakh crores. Then you have universities and other trusts and colleges, etc. They could have another 4 to 5 lakh crores, 30 lakh crores. And between all of them, they'll be getting about maybe 4 lakh crores of inflow every year. Now, we can't expect all of that to come here or something like that. Even if 1% of the incremental inflow comes here, that'll be 4,000 crores. If it is 0.5%, it'll be maybe 2,000 crores. That is good enough for people to get used to it. It's going to take time for people to look at investing in AIFs because they're not very sophisticated investors, barring possibly the Employees Provident Fund, which has appointed managers. Even then, all of them are looking at fixed returns because they have to pay interest to the subscribers. They're not looking exactly at capital appreciation like others do. But the fact that this has been allowed in the schedule of accepted or recommended investment by all these trusts who are regulated as the investment pattern is a very big step. We've been asking for this for the last 4 years and happy that it's finally happened.
Okay, so that's a great way of putting it, that even if you get 1%, look how much it can do for the startup ecosystem. Now, Mohandas Pai, when one goes to the gazetted notification, I saw one sentence there, which is basically that the pension funds which will be investing in startups via AIFs cannot directly or indirectly invest in companies and securities incorporated overseas. Basically, in a nutshell, the investments have to be for those domiciled in India. Do you think this is the way that the government is looking at not only boosting capital, but also preventing flipping, something you have been talking about so vociferously, how we can see India becoming a digital colony, how India is losing its crucial IP primarily because of lack of capital?
Yes, I think so, because please remember, India got $70 billion of capital flowing into venture capital and startups over the last 6 years, from 2014 till 2020, maybe 20 December, out of which only 10% is Indian capital. Out of 43 unicorns, maybe 21, 22 are headquartered outside. And out of 150 unicorns, maybe half of them are headquartered outside. We need more Indian capital. And long-term Indian capital has to come from the insurance companies, has to come from the Provident Fund and long-term pension funds. For example, Canadian Pension Fund, Ontario Pension Fund have all probably put in $10 billion into India and a fair bit of it into venture and startups. Why can't our pension funds put the money? And all these other funds were not allowed because of the investment pattern that they had. It is not advisable for them to put money directly because they may not lack the skills, but putting money into a fund where there is diversification of investment and a variety of companies that are going to be invested are in a fund of fund is a better option. I think it's part of the Atmanirbhar policy. And I think it's very good news because I think government must open up avenues from all passive funds to invest long-term into innovation and startups. Yes, the risk is there, but you can diversify the risk. And overall, if you look at returns, they've been returning the highest for any asset class in the United States for the last 25 years. We're talking to a very big fund in the US. They got about 10 billion, or 10 billion, they put 20% into venture. So that's the kind of scale that is there in countries like the United States, which are benefited by this inflow of money into innovation. So India should also see that over time, and this is a very good step.
No, that's a very valid point that you've also raised. Now, startups are risky business, it's a risky asset. And the way most fund managers do it is that one big bet works out, the others don't, right? There's a lot of hedging also that's involved. Now, the Indian mindset when it comes to pension is very different. You can blame, the historical mindset that has existed, but pension is supposed to be absolutely safe. It's supposed to be completely risk averse. Can you break it down for the viewers of ET Now? Why it's not such a bad idea if pension funds were to invest in startups? And of course, if they were, it has to be calculated and it has to be done with a lot of responsibility.
Well, let me say this. Our estimate is that India has 43 unicorns. From now till 2025, we could have 125 to 150 unicorns. From now till 2025, more than $100 billion of capital will come into venture capital and startups. This is going to be an explosion of capital coming, and there's going to be explosive growth. Even if you look at the US, the highest returns have been in technology companies and innovation. So this is an asset class which gives you high returns. And if you diversify, it gives you returns at reasonable risk, much higher than fixed income. Today, if you look at fixed income like government securities, FDs, the returns are very low and the returns cannot be high. So you have to have a portfolio which gives you low returns with low risk and slightly higher returns with slightly higher risk with a proper allocation so that on a risk-adjusted basis, you earn decent returns on a risk-adjusted basis. So it's very important to factor in the risk. So this asset class has now opened up. The big bugbear was that government was not allowing them because they have an investment schedule, which we have been talking to them to change. Now they've changed. So I think, what does it mean? It means that one more large source of capital opens up. Does it mean that everybody is going to start getting money from tomorrow? No. But you can always go pitch to them. You can always talk to them. And if they start investing, maybe next year, 1,000 crores, 2,000 crores, and maybe in 10 years' time, put in 10, 15,000 crores, that'll be fantastic. So more Indian long-term capital will come in. And these are long-term players who have got long-term liabilities. It will be good for them and good for innovation and good for India.
Oh, absolutely. Right now, it is pension funds which are only being allowed to invest via alternative investment funds or AIFs. You have all been asking also for the insurance companies, the endowment funds also to be allowed to invest. We don't know if that's going to be. But coming back to pension, Mohandas Pai, right now it is via AIFs only. Is that the way it should stay? Because, like I said, startups, risky business, risky asset class. Or do you think that this could just be the foundation and a building block to maybe allow them to invest directly, become limited partners, general partners of venture funds?
I think it's a building block, is a source of capital. Now, what are the sources of long-term capital? In any country, the source of long-term capital are pension funds, life insurance funds, superannuation funds, which collect money every year and pay back after a time because they can make long-term investments. Second is individual savings, and third is corporate savings, and fourth may be banks, which may allocate a little bit of the capital, and fifth will be foreign sources. Now, foreign sources are investing in India. Banks are not investing. Now, the big insurance companies have not been investing. LIC has put in, they say, only 1,500 crores into AIFs, but not done much in the last 3 to 4 years. And the pension funds have not been investing. So these markets have been shut to India. And where will entrepreneurs grow? India is suffering. To look at scale, China invests $65 billion a year, with 60% coming from within China. America invests $135 billion. Capital coming from all over the world, largely in the United States. India only invests $10 to $11 billion, with 90% coming from outside. Does India want to be a digital colony? So the key is open up these sectors, let these players decide whether they want to invest or not. Government policy should not be a barrier for them to invest. If the thing is worthwhile to invest, they will invest. And venture funds and startups will go pitch to them. If they think it is not worthwhile, they will not invest. So just open up the sector, let them have a choice, and let them exercise the choice. That's all we want. And so this is a very good move by the government of India.
Mohandas Pai, it's always a pleasure talking to you. You've been so vociferous about how this entire ecosystem, the startup ecosystem, can be made Atmanirbhar. We need to give a boost and bolster domestic capital. That's one of the moves that has been announced by the government. Pension via alternative investment funds. Will the next move be for insurance? Stay tuned. Right, let's move on, ladies and gentlemen. We have a segment on Startup Central called Green Warriors. We're bringing that back as the government starts taking more initiatives to make India a better place to live in. It's going to start doing so with banning single-use plastic. It is something that the Prime Minister has spoken about for a while now, but finally we are seeing the changes coming in as far as policy also goes. The Environment Ministry, in fact, has to come out with a draft notification for phasing out single-use plastic. Whether it's for ice cream, whether it's for candy, for shopping, all of that. So does this mean there's a big opportunity for, let's say, jute or recycled paper? The government is also looking at alternatives. And this is where many startups can come out with solutions. Karishma Asadani with that story.
Well, right, the government has finally released a draft notification. This is coming in after an important meeting that was held with Prime Minister Narendra Modi in the end of February on single-use plastic. We know that the government has been very keen on eventually phasing out single-use plastic. In fact, due to COVID, there's a lot of hindrance that has come in this agenda. Now we're picking up that as per draft notifications that have been released by the Environmental Ministry, the government plans to immediately take an action on phasing out certain plastic products like that of plastic sticks, candlesticks, candy sticks, ice cream sticks, or also this includes any kind kind of plastic product that is below 100 microns. In fact, government has also ordered that they will be asking industries and companies to produce and increase the thickness of plastic products from 50 microns to that of 120 microns. Let's see the positive side of this is that as per sources also in the government is keen to rope in jute industry products in this to replace plastic eventually. So this could actually turn out to be a good and a positive move for the jute products to flourish out of the phasing out of plastic products. This is coming in, of course, after PM Modi had taken a meeting with also the secretaries across the government.
And stay tuned to Startup Central, our segment Green Warriors back on popular demand. We will be putting the spotlight on all those startups that are solving a big problem over there, how to replace plastic, make India a better place and a greener place to live. You can pitch to us. Maybe you'll even make it to Startup Central. Our email address, suc@etnow.tv. Well, with that, ladies and gentlemen, we're going to take a short commercial break. On the other side, we will be returning with news now, because it's a very important press conference. Everybody around the world is on standby for the future of the AstraZeneca vaccine for COVID-19.